Welcome, Sigma, to the 0.01%.
Dime que lo que, mi gente. Welcome back to the channel. What used to be Money Moves Investment is now Sigma Algo. We went through a rebranding, repurposing. We've come back bigger, better, stronger with greater algos, better teaching, better teachers. Our Discord is going strong, daily calls, etc., etc. Before we get started, make sure that you join. Link is in the description. Now, in this video, we're gonna go over Renko. What is Renko? What does it consist of? How to read it, etc., etc. Very simple, right? Renko is just another form of candlestick analysis. You have your candlesticks. You have Kakanashi, Kagi, line chart, for example. It's just another way to display price. The difference is it's independent of time. So you have candlesticks that are time dependent. When you go to the 5-minute time frame, you see a 5-minute candlestick that represents what price did within that 5-minute frame of that candlestick. Same thing that goes for 15, an hour, 4 hour, etc., etc. They are representations of price during a specific time. Renko is price itself. So the way that I like to explain it is almost like pure structure, because it calculates based on one of two things: a set amount of pips and points that it has moved, or a break of the average true range, the ATR, which is a volatility indicator that we pretty much live and die by as algorithmic traders, right? So let's take Euro USD as an example. 20 pips on Euro USD will represent itself different ways on different time frames because it's time dependent. Each candlestick represents time, right? Versus 20 pips on a Renko chart will only represent 20 pips of price movement, like building a house. 20 pips here. If it goes up 20 pips, 20 pips here. If it goes up 20 pips, 20 pips here. Versus candlesticks can, range, break up, come back down, come back. So it cleans up the chart in comparison. Now, TradingView and other platforms do have an issue with either a repainting of Renko bricks, the closing price of Renko bricks where it can go up 20 points but then come back down, etc., right? We have solutions for that here at Sigma Algo. But let's go over to the chart where I can visually explain to you what a Renko chart is and then go from there. Welcome back to the winning team. So I'm not gonna reinvent the wheel. We're just gonna type up on Google, and you guys can do it the same way. Type it on Google, what is Renko chart? And first link would be by Investopedia that you guys can, and I'll probably link this in the description as well. Okay, so let's just go over it. What is a Renko chart? A Renko chart is a type of chart developed by the Japanese that is built using price movement rather than both price and standardized time intervals, like most charts are. So for example, you use candlesticks, right? We go here and you can see I have this previous setup here, but you can see that this is the 5-minute time frame on NASDAQ. This candle right here has a time limit on it, right, until the next candle forms. If I click on the Renko chart over here, you can see this brick being printed to see in which direction a new brick should be formed, but we have no time interval here. This is straight up price movement versus time interval movement. So each brick is not represented by time, but by price movement itself. It is thought to be named after the Japanese word for bricks, renga, since the chart looks like a series of bricks. A new brick is created when the price moves in a specific amount, and each block is positioned at a 45-degree angle up or down to the prior brick. An up brick is typically colored white or green, while a down brick is typically colored black or red. So, key takeaways. Renko charts are composed of bricks that are created at a 45-degree angle of another. Consecutive bricks do not occur beside each other. A brick can be up to any size, such as 0.10, 0.50 to $5, so on. This is called the box size. It could also be based on the average true range, the ATR. The algorithmic traders, we know what the ATR is. Renko charts have a time axis, but time scale is not fixed. Some bricks may take longer to form than others depending on how long it takes price to move in the required box size. All right, so you can see here, we go to the chart, right? If I was to take a rectangle, right, and let me just highlight here, drag it to the right, and cover all this price movement, right? Let's just cover these bricks. This right here is this box of candles. So you can obviously see, one, it's smoother, and two, you know, it actually helps you avoid a lot of range. So like this candle right here particular, I'm sorry, this is just another box. This candle in particular moved 20 points, right? And I think this is actually set to the average true range. Oh no, this is to tradition. So you can see it made that wick candle down, but didn't close above, and you can see it continue to move in that direction. So each brick just represents price movement, and it doesn't represent candle movement or how many candles it takes to make that brick. It doesn't matter. It's about how, like, did price move in that desired direction and close below or above that desired direction by price calculation. Filter out noise, help traders to more clearly see trends since all movements are similar, then the box sizes are filtered out. Renko charts typically only use closing prices based on chart time frame closes. For example, if using the weekly time frame, then weekly closing prices will be constructed to will be used to construct the bricks. What does a Renko chart tell you? Renko charts are designed to filter out minor price movements to make it easier for traders to focus on important trends. While this makes trends much easier to spot, the downside is that some price information is lost due to simple brick construction of Renko charts. We can see this now with TradingView. TradingView Renko system isn't the best because you can see how it's pretty much repainting, right? You're getting a slower price analysis based on this brick waiting to form. You can see this is faded out. These are solid because price has closed above or below these price levels. And sometimes what happens is if you get a large candle, and this is going to be important when we get later into the series, when you get a large candle such as this one over here, right, it can create multiple bricks, right? This can create multiple bricks if it broke that range plus. So it's like if this is already 37, this will print 1.5 bricks. You can see, if pay attention to where I have the cursor and then where I have it on the Renko chart, right? And then if I drag it down, that's about 20 points. And then you also have 1.5 bricks being formed by the end of that candle, right? So that can be a drawdown when using platforms, base Renko forms. And this is going to be important information later. The first step in building a Renko chart is selecting a box size that represents the magnitude of price movement. For example, a stock may have a 0.25 or 25 cent box size, or a currency may have a 50 pip box size. A Renko chart is then constructed by placing a brick in the next column once price has surpassed the top or bottom of the previous brick by the box size amount. So like I said earlier, it has to break above or below that set amount in order for a new brick to be formed. For the stock example, assume a stock is trading at $10 and has a 25 cent box size. If the price moves up $10.25, a new brick will be drawn. That brick will only be drawn once price closes at that $10.25 or higher. If price only reaches $10.24, a new brick will not be drawn. Once a brick is drawn, it is not deleted. If the price rises to $10.50 or higher and closes there, another brick will be drawn. Renko bricks are not drawn beside each other. Therefore, if the stock drops back to $1.25, a down brick is not drawn next to the prior up box. The price will have to drop to $10 in order for a brick to appear below the prior up brick, right? So basically, what happens is if you have a brick that comes down, it comes up, and then a new brick and price comes back and retraces into that previous brick, it will have to go below that again. It's almost like 1.5 if you're thinking about it, for a new brick to close. So it has to surpass that threshold for a new brick to form to the opposite side. While a fixed box size is common, ATR is also used. ATR is a measure of volatility, and therefore it fluctuates over time. Renko charts based on the ATR will use the fluctuating ATR value as the box size. So for those that are new that don't know what the ATR is, right? So as we just went over, we can have a fixed box amount, dollar, pip amount, point amount, each to measure our price movement. So we always know what that box represents. Each box represents 20 points, right? When you're using the ATR, you're utilizing an indicator as an oscillator called the ATR, the average true range, that is measuring the volume, the volatility of an asset, of a symbol, and using a prior candle calculation. For example, the last 10 candles, the average range was 25. So in that particular time, it's using, for the next 10 candles, 25 points to represent bricks. If in the next set of 10 candles, or whatever you set the ATR to, right? Let's just use the example of 10. In the next set of 10 candles, the ATR jumps. There's a little bit of volatility. Now in that set of 10 candles, the average true range jumped to 30. Now from that on, 30 points would be represented for brick sizes. Would you see it on the chart? Would it be told to you? No, you're just using volatility to measure the bricks, and it's automatically calculated for you, so you don't have to sit there and try to back test and try to find the sweet perfect amount of the bricks to represent, the fixed price bricks to represent what you want to trade. That means that if you wanted to jump from symbol to symbol, it's automatically going to adjust to that symbol's volatility and represent bricks accordingly. Renko charts show a time axis, but the time intervals are not fixed. One brick could take 2 months to form, while several bricks may form within a day. This varies from candlestick or bar charts, where a new candle forms at a specific time interval. We went over that. Increasing or decreasing box sizes will affect the smoothness of the chart. Decreasing the box sizes will create more swings, but you will also highlight possible price reversals earlier. A larger box size will reduce the number of swings and noise, but will be slower to signal price reversals. Renko charts are effective in identifying support and resistance, since there's a lot less noise than there is candlestick charts. When a strong trend forms, Renko traders may be able to ride that trend for a long time before even one brick of the opposite direction forms. Okay, Renko charts, trading signals are typically generated when the direction of the trend changes and the brick's alternate colors. For example, a trader might sell the asset when a red box appears after a series of climbing white ones or green ones, or whatever. You can change the colors. Similarly to the overall trend is up, lots of white, green boxes, a trader may enter a long position when a white brick occurs after 1 or 2 red boxes, a pullback, right? So we can look at this picture right here a little bit, so you can see how we had that pullback. And if you're really like drawing support and resistance, you've been taught to like use the line chart, for example, right? You go in here, you use line, and you can see those points where price has clearly touched without the noise of price act, the candlesticks. You can see points where price has touched. Renko is the same thing, because it's pretty much flat edges from top to bottom. Now you got right here, I could put one right here, I could put one right here, right? And then change it all to candles. And, change this one to candles, and you can see straight up support and resistance levels there. Let me change this one back to Renko. So you can see a strong uptrend, buying opportunity after short-term pullback, strong downtrend after a short-term pullback, right? And don't use that as an end-all be-all. Just jump onto TradingView, switch everything to Renko, and then start trading. Because as I told you, there is a weakness in it. When it comes to a lot of platforms, actually, most of them don't simulate Renko in real time the right way. There's actually a glitch, a lot of repainting, etc., etc. So I personally don't like using the actual emulation of Renko charts on a lot of platforms, not even just on TradingView. Okay. Kind of went over this. The difference between Renko charts and Heikin-Ashi charts. Heikin-Ashi charts also developed in Japan have a similar look to Renko charts in that they both show sustained periods of up and down boxes that highlight the trend. While Renko charts use a fixed box amount, Heikin-Ashi charts are taking an average of the open, high, low, close for the current and prior time period. Therefore, the size of each box or candle is a different size and reflects the average price. Heikin-Ashi charts are useful for highlighting trends in the same way Renko charts are. Limitations of the Renko charts. Renko charts don't show as much detail as candlesticks or bar charts given their lack of reliance on time. A stock that has been ranging for a long period of time may be represented with a single box because remember, it hasn't broken a higher low threshold. If you notice, I'm putting emphasis on certain words because these are going to be important terminology in the future. Thresholds. There's a higher thresholds and a lower thresholds. You break the higher thresholds, what happens? You make a new brick. You break the lower threshold, what happens? You make a new brick. All right. Has been ranging for a long period of time, may be represented in a single box, which doesn't convey anything that went on during that time. This may be beneficial to some traders, but not for others. Highs and lows are also ignored. Only closing prices are used. This leaves out a lot of price data since highs or lows prices can vary greatly from closing prices. The use of only using closing prices will reduce the amount of noise, but also means the price can break significantly before a new box forms and alerts the trader. This is also important to know, right? So let's go over to the chart real quick. We go into the settings here. Let me click on this chart. Go on the settings here, and I have traditional 20. This means that instead of the ATR, I'm using traditional. Each one of those boxes represent 20 points in price. Then the source is open, high, low, close, and you have closing price. So the open, high, low, close is actually using the average of the open, the high, the low, the close, similar to what we just read about Heikin-Ashi charts, but you don't see high lows. This is something that we have developed into what we'll demonstrate in the next video. Okay. But by then it can close too late and get out with a manageable loss. Therefore, when using Renko charts, traders often still use stop loss orders at fixed prices and won't solely rely on Renko signals. Since this is the type of chart was designed to follow general price trend of an asset, there could also often be false signals where the color of the bricks changes too early, producing a whipsaw effect. This is what we're seeing on TradingView. This is why it's important to use Renko charts in conjunction with other form of technical analysis. All right. So, in a nutshell, that's exactly what Renko charts are. Okay. So if you change this to Renko charts, you can see we just had a new brick form to the upside, and we are now seeing a downward brick possibly being produced. You can see as it's trying to form this brick high and low coming down, right? So you can see and easily visualize that, you know, Renko can be pretty easy to use but unreliable in the form that we get it in. So let me show you the difference. I'm using the ATR at 10, which means that for the last 10 candles is measuring the average true range. If I change this to 50, you can see the Renko is actually smoothed out. It's utilizing the last 50 candles to measure its range, right? If I change this to 100, you can see it smoothed out even more. What we saw a red brick is now still an up brick because the average true range hasn't broken in the past 100 candles, right? And this, it's very similar the same way with traditional. Traditional, if I set this to 50, is going to measure the past 50 points, smooth out these Renko bars, and it has to move 50 points up and down in either direction to create a new brick. So I hope that cleared up exactly what Renko charts are. I'll definitely drop this link down in the description. Check it out, read it. It's plain up, straight up what you see. See you guys in the next video.